Hi there, traders, and welcome to this session here today. My name is Francois Duplessis. I am the Senior Market Analyst for HFM Southern Africa. And I'm going to be taking you through my fundamental trading strategy here today, where we are going to have a look at how to trade fundamentals with an increased amount of precision. Now, for you to better utilize this strategy, my recommendation is that you join our either WhatsApp or Telegram channel. Now, I will be sharing the link for that in the description below. So please make use of that. And if you have any questions regarding this specific trading strategy, please drop me a comment below as well, and I will do my best to answer you on that so that you can utilize the strategy to the best of your ability as well. And ultimately, hopefully, profit from off the financial markets. So let's get into the session here today. So as I was saying, you will be required to join our WhatsApp or Telegram channel, primarily for the fact that you will need to be able to access our planner. And that is the weekly planner that is shared on there on a Monday. Now, that weekly planner looks something like this, where it actually shows you exactly which events to look out for on the entire economic calendar that is planned for that week. So what we do here at HFM is we actually go and we bundle that up into what we believe is the highest impact events for each and every one of these specific events or specific days. So for instance, myself, the trading strategy that I'm going to be sharing with you today, I trade this on Euro USD. So I'm primarily going to be focusing on the news events that has the most impact on the dollar, and specifically either the euro dollar currency pair. And for that reason, I'm going to highlight a few events for you as well on this planner, because the fact that for me, I use this trading strategy once a day. Now, you are able to use it more than once a day if you would like to, but for me, I primarily only trade this once a day. So if we had to look on here on Monday, 1st of April, for me, hands down, ISM manufacturing PMI, and as well, it's the only event that we highlighted on there. And you can see there that you can see it impacts USD pair. So we also add that little bit of information for you. On the 2nd of April, you'll see there is two potential events that could affect Euro USD. We have German CPI and we have the JOLTS job openings. Now, with this one, if I had to look at JOLTS job openings versus an inflation report, I'm definitely choosing the inflation report on that one. So for me, that's the one I'm going to go with on Tuesday. On Wednesday, we will have a look at, you'll see now all of a sudden there are three potential ones to choose from. We have the European flash CPI, we have the ADP non-farm employment change, and we have the US ISM services PMI. If I had to rank them as per importance, I would hands down say that the US ISM services PMI wins that fight. So that would be the event that I'm going to be trading on that specific day. On the Thursday, there is nothing that affects either a euro or USD pair. Yes, there is an event that affects a CHF pair, which could potentially affect the Euro USD. But as I always say, there is no maybe in trading. It has to be a yes or no. So CHF pair affecting Euro USD, maybe. For me, maybe. There's no such thing in trading. So that day, I'm going to take a day off. And then last but not least, on Friday, I don't even think we need to debate which one of those ones we will be trading. Hands down, we will be trading US NFP employment change, which is at 2:30. So let's get into it. So for me, I normally start out on a Sunday. I do a little bit of analysis from a technical perspective as well. Now that I have planned my entire week and I know exactly on which day and at what time I'm going to be trading, I just want to see where the primary support and resistance levels within the market is. Now, as a newbie trader, sometimes it can be very difficult to identify it using candlesticks. So those specific support and resistance levels. And by the way, I do this on a daily time frame. You can see it up there as well, just under the Euro USD symbol. You can see there it does say daily chart. So what do I do to simplify it a little bit? I switch over to what is known as a line chart. And this kind of assists in just simplifying, taking the noise out of your chart and showing you where those potential support and resistance levels would be at. And now from here on, you can obviously drop it back down to a candlestick chart. Now, again, I just normally add one support and one resistance so that, again, I want to keep my charts as clean and simple as possible. I want to know where that range is, where the market will most probably be trading for the next 5 days. Now, as well, on a Monday, I do share my analysis and my outlook for the week with all of you as well. So even if you want to use that as a bit of a copy and paste, you are welcome to do so. But ultimately, I would urge each and every one of you to also do your own analysis to assist you in growing as a trader. So again, let's just do a little recap. So on Monday, we are trading the manufacturing PMI. And we have now done our technical analysis as well. So as you can see here, now we've dropped it down from a daily to a 4-hour time frame. And primarily, we just want to look a little bit for market structure on this one here now. So you can still see the primary resistance is there at the top, the support is at the bottom, and then there is a descending triangle that appears there. Again, don't really care about the pattern name or pattern formation. For me, it's more about finding that smaller support and resistance areas. And that descending triangle provides us with those support and resistance areas. So again, you can also see right at the bottom at the support level on the descending triangle, there is a false breakout with that candle that appears right there at the bottom. So for me as well, you will see that I'll be using pending orders for this trading strategy. I will be placing my order below that wick for this specific one. Or if we were looking for a buy, obviously outside of the resistance on this descending triangle, again, looking for that breakout out of the actual structure where the market is currently. Now here you can see, now we're looking at entering the trade, okay? Dropping it down to a 5-minute time frame. I normally do this about 20 minutes before the market event actually gets released. And again, traders, I want you to keep this as simple as possible. Okay, remember, simplicity, simplicity, simplicity. Okay, so what are we looking for here right now? I'm literally just looking within the market structure where we are now from a technical perspective. Okay, where are we closest to? Am I closest to the resistance or am I closest to the support? And at the moment, we are very close to the actual support. Okay, so we are closest to support. That means the breakout is most likely to happen to the downside, okay, which means we are going to be looking for a sell. And that's what the setup's going to look like. So here you can see again, looking at that red line. Why is the red line there? Because the fact that, remember, we had that little breakout, that false breakout a little bit earlier. Showed it to you on the 4-hour chart. And we want to place our order below that level, okay, even just a pip or so below that level. But that is where we're going to look for the actual breakout. My stop loss is a set 15 pips. My take profit is a set 15 pips. And I place my order 15 minutes prior to the actual news event release, as I do give a little bit of distance between my actual order and the current market price. We're not smothering the trade. We want to make sure our trades are also executed. So you don't want to place your order like 30 seconds before the news event comes out. So again, planning everything nice and properly before the trade is actually released. And there you can see now market released the PMI results, market spiked, trade got entered, trade hit TP within 5 minutes and profits were made. Okay. But now something really beautiful happened. So remember, rule number one, we are protecting our capital. Hence why I'm not doing a live market execution because, well, I can't predict the future. Okay, I don't know what the report's going to say. But using a pending order, I can capitalize on what the market could potentially do based on the movement within that time frame. Now here you can see obviously we achieved the take profit within that first 5 minutes, which means now I can enter a second trade if everything checks out, and I'll be risking profits. Okay. So normally I risk 5% of my account on the initial order. So now I'm going to add a 2.5% trade after that initial 5 minutes. But first, we need to have a look at what the data now actually said. So here we can see US PMI manufacturing PMI came out, and it came out 50.3. It's green, meaning good news. Good news for who? Good news for the US dollar. If it's good news for the US dollar, it means that the Euro USD pair will be looking to short, sell, go down. Plus, we just saw that the market sold. There you can see. So now I have market confirmation that the market is moving in that direction. Plus, I have fundamental confirmation because the report has now been released. And that report is also showing me that the market is moving in that set direction. So what do? Now I can place a second trade. And now I can do a live market execution because, again, now I'm risking profits. I'm risking 50% of the profits that I just made on my previous trade. Again, 15 pip stop loss, so that's 150 points, and 15 pip take profit, again, 150 points. And there is the second trade for the day, meaning we are up 7.5% for the day on this specific event. And now we are done trading for Monday. So now we go back to our planner. It's Tuesday, 2nd of April. We said we are trading the German CPI, which means it is 12 o'clock South African Standard Time if it's 10 o'clock GMT. Why? Because South Africa is GMT +2. So here we go again, looking at that structure. We obviously sold on Monday. Now we can see that it bounced off that support level that we had placed there on Sunday. What does it mean from a technical point of view, traders? If we bounce on a support level, it means that the market is most probably retracing, going back up, buying. So dropping down to that 5-minute time frame. We'll go back to that slide just now. Here we can see that bounce from of the support, and again, smaller structure, 5 minutes, nice clear buy. Again, simplicity. What are we looking for? Where are we closest to? Now, for me, that support level is also very close, so we have to break through that entire support zone. That's going to be quite a few pips. So, but we are very close to that buy position. So we place our entry just a little bit above previous high, which was about 10 minutes ago. Place our entry there again, 15 pip take profit, 15 pip stop loss, and there was the actual trade. Now, two things I want to mention here. Okay, first of all, we did not hit profit in 5 minutes. Okay, you can see it took exceptionally longer. Okay, meaning that that second trade that we entered on Monday was not valid on Tuesday. Because remember, we have to enter, or we have to achieve profits within 5 minutes to be able to enter that specific trade. Now, for me, I have backtested the strategy quite a bit. So I had faith within this trade to keep it open for this amount of time. Some traders have not backtested the strategy for that amount of time, or have even traded the strategy for some amount of time. So for instance, if you have a look at that very first big candle, you'll see there's a nice big spike, and the market does go into profit, okay, but doesn't achieve profits, or it doesn't achieve take profits, but it is in profit. And if you wanted to close your trade at either break even or that little bit of profit at that point in stage, I would not blame you. Okay, it is a good way to just manage risk on that trade and say, you know what, instead of risking any of my capital today, I am just going to take a break even and we'll trade again tomorrow. Okay, so you are more than welcome to do that as well. Again, depending on your trading strategy, you are welcome to adjust this in any way that you would like to. Okay, moving on. Now we are at Wednesday. Remember, Wednesday we had the Euro Flash PMI, ADP, and ISM Services PMI. And We said we are trading the ISM Services PMI, which will be at 5 o'clock South African Standard Time. And again, just using that same structure. So not making analysis complicated here. We're using the exact same structure that we had on Monday. We still have that descending triangle. We just extended that trend line a little bit further. And again, we can see it's been broken. We're still bouncing off that support. So from a technical perspective, the possibility for a buy on this specific event is still our best option. So let's drop down to a 5-minute time frame and now have a look. And here you can see, even if we draw this ascending channel that it is trading on the 5-minute time frame, you can see again it's closer to the top of this channel prior to the news event than it is to the bottom of the channel. So again, giving you that advantage from a technical perspective to show you where to place your entry and which one of the two you should enter. Because remember, when we are trading fundamental events, that is exactly what our technical analysis is used for. It is used to show where we can safely enter into the market without putting us at a disadvantage. Okay, you always want to have that edge when you are entering your trade. So there is the setup that we were looking at for this specific one. Going into this PMI, we're at the top of that channel. So you can see just placing the order just above that previous market high, waiting for the news to be released. Again, doing this 15 minutes prior to the news event. And boom, market triggers the trade. Trade achieves take profit within 5-minute time frame. Now, again, you have to apply that little bit of patience for any trading strategy to have a proper edge. How do you apply that little bit of patience? That little bit of patience is being applied by waiting for that 5-minute candle to close. Because of what happened if you now entered that secondary trade as a live market execution, and you did it at the top of that wick, chances are you would have triggered a stop loss on this specific trade. But now if you've waited the 5 minutes, you have achieved take profit. So now, again, let's look at what the results were. We can see here ISM PMI came out red. Red is what? Red is bad news. Bad news for who? Bad news for the dollar. That means Euro USD will go up. We just saw confirmation. Euro USD went up. We have the market report that proves this to us as well, giving us that additional confirmation as well. So what do we do now? We enter our second live market execution trade after waiting 5 minutes. So there is the next market execution trade. And now you are doing this with, again, 50% of your profits. Again, 15 pip take profit, 15 pip stop loss. And there is our second trade for the day, which is also now, remember, our 5th trade for the week, on which we made 7.5% on Monday with the 2 trades, 5% on Tuesday because we didn't hit take profit, so it was a bit of an extended trade, and now another 7.5% here, meaning we are so far up 20% for the week. On Thursday, we are having a day off, so we're just going to move right over to Friday, which was NFP. Looking at NFP again, now we can see during Thursday's trade, obviously the market didn't stand still on Thursday, so the market still moved. We had that massive spike as well on Wednesday, which you can see there as well. Spiked from that 23.6% Fibonacci level all the way to the 50% Fibonacci level, and then kind of continued from there onwards. Got all the way to our 61.8% Fib level. What is our 61.8% Fib level? This is that golden ratio from where markets normally retrace and do a little bit of a correctional phase. And here we can see we did have that bit of a correction and the market is still in that slightly down trend, meaning that from a technical perspective, we will most probably be looking for a sell today. And this is exactly what we were looking for this day. And this event, I even traded live with you guys as well on the HFM Facebook page, which you are welcome to go and check out and join me for the next event as well. Again, if you join our Telegram or WhatsApp channel, which I said the link is below in the description, you will know exactly when I do go live to trade these events with you as well. So here, what we're going to do, we are looking for that sell. So again, just drawing in some market structure on the 5-minute time frame, showing where our entry will be, which was just under that 50% Fibonacci level. Again, placing our stop loss at 15 pips. But you will see I have a significantly larger take profit on this one, which was 30 pips. Why? Because traders, this is NFP. Okay. 15 pips on NFP is a joke. We can honestly do 30 pips on NFP quite comfortably. So have that extra additional profits. This is what NFP is for. So again, the risk, which is 15 pips, is 5% of my account. But if I achieve the take profit, there is a 30%, there's a 10%, sorry, take profit on that specific trade. And there is our NFP trade. Again, triggered beautifully, went all the way to the bottom and hit that take profit as well. And now again, what happened? We achieved take profit within the first 5 minutes, which now means we can enter into our secondary live market execution trade, which is also 5%, 50% of the profits that we just made. Now, as we just made 10%, this is 5% risk on that. And so, again, looking just before we enter the trade at what the market actually said, the report came out at 303,000 new jobs for NFP. This is obviously fantastic news for who? The dollar, meaning Euro USD is going to go down. We just saw Euro USD went down. So proof is there for us. So now we can enter into that second trade. Now we revert back to default setting. Okay. 15 pip take profit, 15 pip stop loss. And we are risking 5% of our account now because why? That is 50% of the 10% that we just made. And there you can see second trade playing out quite beautifully for us on this one as well, leaving us 35% in profits for this specific week. And that is it for me for this explanation on how to trade fundamental events with more precision. Now, traders, if you have any questions, as I said, please pop it for me into the comment section below, and I will do my absolute best to answer those comments for you or those questions for you. Other than that, I look forward to seeing you in our next video so that we can help you again become a better trader. Please also look out for the HFM events and have a look at when we are in your town, as we would love to meet you in person and also answer some of your questions in person, as that is all we are here about at HFM, is creating better traders and providing those traders with the best possible market conditions. Thank you so much, traders, and have a lovely day. See you again soon. Bye.